Hi there, thanks again for attending our Asset of Value event. My promise to you is that we will get back with answers to questions that were asked during the breakout rooms that others might be interested in hearing. In Exit, we had 7 really interesting questions that we never had time to address. We're planning a management takeover, but the management team will not have the capital to buy me out. What can be done? Next, we have appointed an executive team over the years to take over from the current owners themselves. We do not know how to give over the reins. How do we get it right to transition the business from our responsibility to theirs? Should we stagger the shareholding over 7 years? Good question. Third, if we work with Auric for 24 months, why does Auric not take equity in the business and then have an incentive to sell the business for as much as possible after 24 months? There are good reasons for that. Question 4, my business generates good, solid income for me and my partners. When is the best time to sell to get a good deal, and does it mean we will because we already have income growth in play? No, it doesn't, but a great question, thank you. 5, you said it's important to start with the end in mind. How do we use that to develop an exit strategy 7 years ahead of today? 6, how do we adjust our business's growth strategy to accommodate the payout of an existing partner? Yeah, we often see that. It's a real question, especially in the professional services space, the engineering sector, the legal sector, the medical sector, and so on. And then lastly, number 7, how do I structure a family succession plan and be sure that I give my kids the space to achieve what they want to achieve whilst protecting my legacy and value? Yeah, that's about the old lions and the young lions coming together. How do you determine the future of that business, and how do you hand over the reins? Especially when the teams that have been built in those businesses are used to reporting to the exiting generation. I think possibly the question that's worth answering, if we were to select one, my business generates good, solid income for me and my partners. When is the best time to sell to get a good deal, and does it mean we will because of income growth? To answer that from an asset of value perspective and from a buyer's perspective, good income alone is certainly not enough. There are 5 levers that impact the valuation process, and by valuation process I mean both establishing the cost of the acquisition, in other words your selling price, but also establishing the terms of the deal. Very often you can get a higher term or a higher value to the business if you agree to remain on and deliver future profits over a period of 1, 2, 3, 4, 5 years. For many of us that's not tenable, so what we ideally look to achieve is to maximize the value of the business and to secure the exit on terms that might see us remain on for a short period of time to really hand over and do some house cleaning, for example 6 months or so. So good income alone is only one of the features. Good income suggests that there's growth in the business, or alternatively it could suggest that you have a very profitable business. Both of those feature strongly in improving the valuation. But the 5 levers really center around 5 questions. The first is, what makes your business different? Beyond the many competitors you have out there, how do your customers and clients deem you to be special? In fact, special enough that you've got good stickiness and client retention, and that you've got really good word of mouth, new customer acquisition in play. That would suggest you know who you serve, you know how to do it differently, despite the fact that you're offering a similar product or service to the many competitors out there. The experience you create for those customers or clients keeps you in play. The next set of questions that a valuator or a buyer would ask is, okay, so I can see what makes you special, but how do you set yourself apart in terms of how you function and operate? They ask this question because if they acquire the business, they need to know how to operate the business, and you won't be there. There you need to be able to demonstrate that you have a system of delivery in place. That is, all the commercial functions, from marketing, sales, operations, procurement, finance, are all systematized. They're organized activities in a sequence with measured outcomes, and all of them can be operated and run by a team. If you can show you have each of the functions stipulated, structured, almost like an operating manual, stated and written down, and furthermore you can show that that is what runs the business, you have a system of delivery in place. The third set of questions is, well, if we acquire the business, who will run it? And to the extent that you have the first two elements in play, in other words, you have a well-positioned business that distinguishes itself in terms of how it meets its market and services its market, you have an operating manual or set of activities that govern that, you then need to be able to demonstrate that you've identified key people to operate, lead, and manage those systems. Because to the extent that they are, what we have found historically is that when you have team members that perform well because they're operating the system sets that they built with you to govern the business, if they perform well, their confidence builds. If their confidence builds, their interest and excitement, meaning and value in their job function builds. And through that, you develop a loyal team that you'd be able to demonstrate powers the business. And then the final question, of course, or second to final question that a buyer asks is, well, given that you have those three elements in play, is there growth ahead? You need to be able to demonstrate growth prior to exiting and lifted growth. In other words, beyond organic growth, you need to demonstrate 2-3 years of next level growth. That creates excitement for any potential valuator or buyer because they're going to perceive that those growth rates can be maintained into the future. And that additional growth will help offset the acquisition. If you can show those four elements, you've got four of the most significant levers that classically will increase the industry standard multiple by at least another 4 points. And then the final question gets asked, without you there, what can happen, what will happen, and will we still have a business tomorrow? That ability to demonstrate independence is vital. It's that and that primarily that sees the terms of the deal leave you with the shortest tenure post-sale involved in the business. I hope that was a good question to answer. We'll find time to answer the 7 others, but watch out for our next event. There's new content consistently as we learn more and more and more from our clients out there.